Fossil Firm presents Stay Strong webinar series, Thursday, 1:30, June 11th. Thanks to everybody that's stayed with us so far. We've got a lot of perfect attendance people in here. We'll give you guys a shout out on the next webinar for sure. But thanks everyone for attending. We hope everyone's staying safe and healthy as we get through phase 1 and 2 of these reopenings. So we appreciate everyone showing up today. Definitely a thanks to our research team. Most of them are here. We've got some working from home. Chris working from home today, and we just wanted, they're the ones that do the behind the scenes research for us and make sure that we're all up to date for these webinars. So thanks everybody. You've got John and myself today. No special guests, just us, and we'll be going through things for you. Reminder on technology, we've got the Q&A section, so if you have questions, throw them up there. Somebody else has a question that's just like yours, just like theirs, and it'll go to the top. We'll make sure we get those answered first. If you have any issues, we got Shelby behind the scenes. She'll make sure that everyone can hear us, everyone can see us, and we'll go from there. And then we'll get those slides and the recording out tomorrow for everybody that wants to see this again. The agenda. So today we've got the news review, what's happened, what's going on. Then we'll get into what's changed, what's new. And then John's going to go through payroll relief updates and some of those items that have changed. And then we'll go through kind of an extended Q&A today on everyone's questions. All right. So with that, I'm going to have Shelby get us a first poll. We're going to do a couple polls today. So how are you managing your PPP? So we're either doing it internally and it's easy. We're doing it internally, it's a bit challenging. We are using an external consultant and it's easy, or we are using an external consultant and it's still challenging. These responses rolling in, this is great. All right, Shelby, why don't you share those results with us? And we've got, so about 42% of you are doing it yourself and it's easy. That's great to hear. We've got 45% that are doing it internally and it's a bit challenging. And then we've got a few of you using external consultants, both being easy and challenging. So it's good to see. It's good to see. There's a mix here, but we've definitely heard anecdotally that it's still challenging and people are still wondering about all the requirements here. But this has definitely changed after they've laxed those requirements as of late. All right, so we'll get into the news review. As always, we're going to go through Twitter and we scroll through everybody's accounts on a weekly basis, see what's going on, see what the updates are, try to get some insight as to what might be coming. So the first tweet, what'd you do to my tweets, John? John doesn't know how to, see, this is the problem. John doesn't know how to use Twitter because he's from that generation that doesn't know how to use technology. And so this is what happened. So all my tweets just got deleted.
Sorry, I tried to put the PowerPoint together and
you can't trust this guy.
You were working out in the gym,
Can't trust this guy. Anyways, no, there actually has been very little movement on the PPP since the Flexibility Act was signed. So we figured we would take an opportunity to take a break from monitoring everyone's Twitter, but really nothing has come out. They've really just been touting the successes of the program, so we figured we'd skip over that. But what we will be going over today is what's changed and what's changed. So we went through some of this last week. They've expanded on it. The biggest thing since we did our webinar last Thursday was they came out with a joint statement between the Treasury and the SBA. And they clarified. So the PPP Flexibility Act was signed. It was, a big piece of legislation that upped it to 24 weeks. Then they came out with a statement and said, we're working on guidance, which we still don't have new guidance, but they clarified a few issues. So we'll go through those again. So the PPP Flexibility Act, again, was signed early June. What changed? So the old bill said the covered period was 8 weeks. The new bill says it's 24 weeks. So they extended the period to 24 weeks. One of the questions we've gotten a lot was, are we using 8 weeks within the 24? So are we picking an 8-week period within 24 weeks? We have not seen that. We believe it's either you can still use the 8-week period if you had spent all your money and hired all your employees back, or you can elect to use 24 weeks, which gives you more time to spend the money. It also means that you probably have to demonstrate that you've had everybody hired back for a longer period of time. So the covered period was increased. The second thing that they did was they changed the mix. So before, at least 75% of the loan, of the amount you apply for forgiveness had to be spent on payroll, which meant up to 25% of the amount you spend and apply for forgiveness could be non-payroll. They changed that, so now it's 60-40. One of the questions we've been getting all week was, does this now mean, the way that the bill was written, does it mean that we have to spend 60% of our total loan on payroll, meaning you have to spend a lot more money than you did before? So they came out, that's one of those things that came out in this joint statement, and they said, as long as a borrower uses less, if a borrower uses less than 60% of the loan amount for payroll costs during the covered period, they'll continue to be eligible for partial loan forgiveness. So if you got $1 million loan, it doesn't mean you have to spend $600,000 on payroll. It just means that if you spent $500,000, you've got to spend $300,000 on payroll. So that was a big clarification point that came out of this joint statement. Going back to our chart of what's changed, we've got 3 safe harbors now. So we've all known about the safe harbor that if you hire everybody back by June 30th, then it doesn't matter how many FTEs you had during the covered period, the loan forgiveness will not be reduced. They increased that safe harbor to December 31st and said, as long as you rehire everybody by December 31st, then it doesn't matter how many FTEs you had in your covered period. What they also said was, if you tried to hire somebody back and they refuse, that doesn't count against you. If they quit, that doesn't count against you. So there's, this is the safe harbor that's always been there. So you used to have until June 30th, now you have until December 31st. They also came out with 2 new safe harbors that will be coming out in the application guidelines. And the first of that is the safety FTE safe harbor. So remember, you have to spend the money, you have to hire everybody back, and when you hire everybody back, you have to pay them at least 75% of their rate. So that middle category of you have to hire everybody back, they're now saying they're giving you an extra out. So that extra out is the reduction in FTEs due to safety concerns. So they said there's a safe harbor that any employer who is unable to return to the same level of business activity due to compliance with requirements or guidance from the Health and Human Services, Center for Disease Control, or OSHA, that if you can't bring back your employees because of concerns over safety, that's not going to work against you. So it's one more out that if you can't bring everybody back, you look at why you couldn't bring them back. And it's one of the reasons is, well, I couldn't return to the same level of business activity and therefore I didn't need everybody. This gives you an out and gets more of your loan forgiven. So back to our chart here, then we have the last safe harbor, which is this second tranche of rehire FTEs. And what they said was, if you are unable to rehire the prior employees, which we kind of talked about, like you offer them a job and they say no, or you're just unable to rehire them or rehire similarly qualified employees for these unfilled positions, that will not work against you. The takeaway of all of this is all these safe harbors, they basically want to say, as long as you spend the money on your employees, whatever employees you were able to bring back, you should be eligible for forgiveness. The only thing that we've found is if you continue to lay people off for no good reason, which is very unlikely, then you should get loan forgiveness. So there's more safe harbors to allow you to get loan forgiveness within the second tranche of the requirements. So more things that changed. Again, we talked about this last week. The loan term increased from 2 years to 5 years. So now if you don't spend all the money and you don't get it all forgiven, you now have 5 years to pay it back. Your loan, your first payment on the loan, if you don't spend it and get it all forgiven, the first payment used to be 6 months after you were funded. Now it's 24 weeks after you were funded, or December 31st, 2020, whichever is earlier. So you're really not looking at any loan repayments until November if you didn't spend all the money. New loans, so they came out and they said, we're not going to do more loans after June 30th. So if you have not received the PPP, you're running out of time. You only have until June 30th. They did not extend that date. So after June 30th is up, then all the loans that they've given out is the total of all they're going to give out. We don't anticipate there's going to be any more loans or any new tranches of funding for people that have already received loans. And then the last thing was the payroll tax deferral, which we're going to get into in a second, which is before you could defer your payroll taxes, and John's going to talk about this, up until you got forgiveness. Now you can defer your payroll taxes up until December 31st. So with that, I'm going to first kick it to Shelby and say she's going to throw up a poll that says, what is your biggest concern about getting your loan forgiven? So the first is, well, I don't understand the needs of the SBA. The second is, I'm concerned that we're going to spend it on appropriate costs. Ensuring we meet the forgiveness rules for the majority of the PPP dollars, or last, that requirements will change again and we'll have more effort to manage it. Awesome. All right, Shelby, why don't you share those poll results? Great. So 54% of you are saying the biggest concern about forgiveness is ensuring we meet the rules for the majority of the dollars. And I can't blame you there. There's lots of rules. There's lots of safe harbors. There's lots of things. So it's not always as easy as just filling out the application and spending the money. You still have to do these calculations. And then second was, that the requirements are going to change again. We fully anticipate them to change again. I would say that is less of a concern of ours, just because we think they're going to continue to relax these rules and try to get this money so that it's all forgivable. All right, thank you, Shelby, for putting that up. And with that, I'm going to kick it over to John for the payroll relief updates.
Awesome, thanks, Dan. I actually have to compliment you on your new shirt you're wearing, and I guarantee that your wife picked that out, because I know your taste isn't that good.
That's a fact.
And you're colorblind, aren't you?
Yes, I am. Thank you.
Okay.
Yep. Hopefully there's a credit for that you're going to talk about here.
Well, your shirt's orange, just so you know. Okay, so payroll relief update. So we talked a little bit, Dan talked a little bit about this, and there are some incentives in this plan, in the CARES Act, that aren't getting talked about as much as the PPP, but now they kind of go hand in hand with each other. So we're going to go through some payroll relief updates here to educate everybody on some of these things. So payroll tax deferral. So now with the PPP and under this new act, you're allowed to defer your payroll taxes from now until the end of the year. So this is how it works. December 31st, 2020, you can defer the employer portion of Social Security taxes from now until the end of the year. So that Social Security tax is 6.2%. You also can defer your Medicare tax just the Social Security tax, 6.2%. The payment of that, now it's basically an interest-free loan, so it gets split. The first 50% will be due December 31st, 2021, with no interest basically. And the remainder, the second 50% of the deferred payroll taxes will be due December 31st, 2022. So basically you're taking any payroll tax that you would owe from now through the end of the year and splitting that up over the next 2 years. So pretty good incentive and 0% interest. All right, so let's look at the paid sick and paid family leave acts. And here's a side-by-side comparison of these two acts. First of all, these pertain to businesses that have 500 or fewer employees. And this is in effect from April 1st through December 31st of this year. Here are the qualifications. So under the Paid Sick Leave Act, and this really has to do with employees that can't work because for COVID-related issues. So the first is the employees under a federal, state, or local quarantine or isolation order related to COVID-19. The second criteria, and it only has to be one of these, by the way, the employee has been advised by a healthcare provider to self-quarantine due to concerns related to COVID. The third, the employee has experienced symptoms of COVID-19 and seeking medical diagnosis. The fourth, the employee is caring for an individual who's subject to a federal, state, or local quarantine or isolation order related to COVID-19, has been advised by a healthcare provider to self-quarantine due to concerns. This we're finding with our clients is probably one of the more popular ones. Or the next one, the fifth, the employee is caring for the child of such employee if the school or place of care of the child has been closed. As we know, the schools were closed for the remainder of the year other than remote learning. Or the child care provider of such child is unavailable due to COVID implications. And the final sixth item, the employees experience any other substantially similar conditions specified by the U.S. Department of Health and Human Services. So if any of these apply to your employees, you may qualify for the paid sick leave. So let's look at this side-by-side comparison. So the paid sick leave goes from April 1st to December 31st. The paid family leave is the same. The paid family leave only pertains to the fifth item I mentioned, employees that are caring for the child of such employee if the school or place of care of the child has been closed. Okay, so that only pertains to the paid family leave. The amount of leave under the Paid Sick Leave Act is 2 weeks. So employees can receive 2 weeks of pay. Under the paid family leave, they receive an additional 10 weeks. So it'd be a total of 12 weeks that these employees can be paid if they meet the criteria. The wage limit under the paid sick leave, they will receive their current wage or the unemployment or the federal minimum wage up to $511 per day under the sick. Under the paid family, it's their current 2/3 of their current wage or up to $200 a day of the minimum wage, the greater of the two. So this is a way for employees to continue to be paid under the sick leave, their current pay, or 2/3 of their pay under the Family Leave Act. How is this a benefit for employers? Well, there's costs that are covered. Basically, the government would cover the wages, but they also would cover the Social Security tax, the Medicare tax, and any health insurance paid to these employees. Same thing with the Paid Family Leave Act. So more or less, these employees that are unable to work for COVID-related reasons would not work. They would more or less be paid in full or at least receive 2/3 of their pay, and the employer would be reimbursed for all of these costs. So it's a great benefit for employers to consider, and I'm sure some of you have employees that are in these situations. So how does this all get reported? These are questions we've gotten on some past webinars that we'd really like to clarify here. So this slide shows the current Form 941. This is the employer's quarterly federal tax return that is submitted for most companies on a quarterly basis. This is the old form. For those of you that use a payroll provider, your payroll provider generally is preparing this form for you. It reports income taxes, Social Security tax, Medicare tax withheld from employees' paychecks. This is where you pay the employer's portion of the Social Security or Medicare tax. And like I said, you fill out this form every quarter. So now that we have these credits, how do you capture these credits and how do you report the payroll tax deferral if you choose to take the payroll tax deferral? Well, here's a draft of the new form, and typical with government, we don't have a final form yet, and we will need a final form by the end of this month, June 30th, because the quarter is coming to an end. So under the new form, we have sections here where you can include your credit for the qualified sick and family leave wages. There's also an employee retention credit. That really won't apply to anybody that received PPP funds. So we don't have much, we're not discussing many details on that one. And then the deferral amount of the employer share of Social Security tax that we've been talking about also gets reported here. So if we look specifically at some of the line items, line item 5A and 5B, you'll see that taxable Social Security wages would be reported here. That's how it always is done. Now there's two new boxes under 5A. You have 5A1, 5A2, where you can include the qualified sick leave. So if you have an employee that meets some of those COVID related items that we talked about, you would include any of those wages here, and that's a 6.2%. 6.2% of that is the Social Security portion. You also have the family leave, same thing. Any family leave goes in that same box. Any credit, so the credit again is equivalent to the amount of wages, Social Security, Medicare tax, and health insurance. Any of those items that you paid for those employees would now go in here as a credit. It will basically reduce your payroll taxes. It will go on line 11B. Same thing with the employee retention credit. Any of those items would go on line 11C. Line 13, so the deferral. So if you choose, and you need to make this designation more or less now before this June 30th quarterly Form 941 gets filed for you by your payroll company. If you want to defer your payroll taxes, you need to contact your payroll company and inform them that you would like to do that. And if you do that, on this 941 form, the amount that you're deferring would go on this line 13B, deferred amount of the employer share of Social Security tax. The benefit to you is 6.2% of the wages of employees for that time period. So it could be a very large amount of dollars that you can defer, like we said, 0% interest, and you pay it over the next 2 years. Same thing with the credit for qualified sick and family leave. Anything from there, there's a worksheet, and those credits get reported right here, and the employee retention credit. Should these credits actually result in you receiving a refund on your Form 941, then the IRS would actually send you a check for that refund amount when the quarterly report is filed, in July. Self-employed individuals, this applies to you as well. So anyone that's self-employed, you can also defer your, more or less, your self-employment tax, and that's on your net earnings. And your deferral period is from March 27th through December 31st. Now, self-employed individuals do not file a Form 941. So the way you would capture that is actually working with your accountants and advisors to determine what that amount is, and you would reduce your quarterly estimated tax payments to account for that deferral if you choose to make that deferral. Now remember, that deferral will be due over the next 2 years. So again, it's an interest-free loan, different from the PPP. You aren't paying this. It's not being forgiven. You do have to repay it, but self-employed individuals qualify as well. RDG payroll. So if you use RDG payroll, or need in a payroll company, or interested in making a change or want to review RDG payroll, we actually have a very quick 2-step process where we can include this payroll deferral and make it effective for you, and then capture it on that Form 941. Here's kind of a slide that just shows how we simply can do that through RDG payroll. So this is a resource. If you're interested, just let us know, and we can help you capture this payroll tax deferral.
All right, so with that, so again, not much in the way of PPP changes this week. We kind of trolled Twitter and tried to figure out what they were going to do, but the biggest thing that came out was this joint statement between the SBA and the Treasury. So we decided that we were going to focus on these payroll tax credits that are part of the Family First Coronavirus Act, all part of the government stimulus. There's lots of stimulus out there, so we want to know, what topics would you like us to talk about in upcoming webinars, assuming that we don't get treasure troves of guidance. Obviously, we're going to continue to update everyone as soon as the guidance comes out. This week there was none, so we filled it with some additional stimulus items. So Shelby, if you could share that poll, and we just want to know from you, what do you want us to talk about? We've committed to these webinars through the end of June, so besides the PPP, is there anything that you'd like us to cover? We've got payroll tax benefits, we've got employment-related credits, individual and corporate tax incentives, other sources of funding like the Main Street Loan Program, COVID legal and reopening, or other. And if you have other things that you'd like us to cover, we're happy to share our resources with you guys as you try to navigate this situation. Everyone's in it together. We definitely want to use our network and be able to help you guys. So, anyway, what we're doing, really just trying to get a sense of what everyone would like us to continue to cover in addition to the PPP, so we can get the most help out there to the community. Shelby, all right, if you could share those results for us. We've got, individual and corporate tax incentives. Those are huge. We've helped many clients so far get 6-figure refunds of tax. So that's been great. We've been enjoying that. Other sources of funding. So, that could include the Main Street Loan Program, the EIDL, stuff like that. COVID legal. Sorry. So we'll look at all of these. This is great. And if you didn't get a chance to answer this question, or you have something else, just hit it in the chat, and we'll continue to look into those. All right. So Q&A. So like I said, we're gonna, we've answered about 25 questions so far. We want to spend a little bit of time answering any questions. Please feel free to throw them in the Q&A. But so far we've got a few. So this one is, if my employees that I brought back are not working 40 hours yet, do they just have to be working 40 hours by December 31st? Great question. If your FTE count over the covered period, which could be 8 weeks, it could be 24 weeks. If that FTE count is not what it was in your base period, then you have until December 31st now to get them back to full employment. So the answer to that is yes, you can bring them back by December 31st.
We have a question here on supporting documents. What supporting documents are required to be submitted with the forgiveness application? So basically, on the payroll side, it'll be payroll reports. So, and if you use the alternate covered period, that gives you a clean 2-week period up to the 8 weeks or whatever, your 24 weeks, whatever number of weeks you're going to use, then you would submit those payroll reports. As far as the other items on the lease, your rent, you would submit your lease agreement. If you have mortgage interest, you would submit your mortgage statement that you received. If you have utilities, you would submit your utility invoices and proof of payment. So, and everything's on the 11-page forgiveness application that came out for the 8-week period. We're still waiting for the revised forgiveness application that would cover the 24 weeks.
Awesome. So this question looks like a couple people have the same one. For self-employed owner comp, is the max still $15,385? Reminder to everybody, $15,385 represents 8 weeks of $100,000. So if you as an owner made $100,000 or more, you were limited to $15,385 or whatever you were paid in 2019. So now that they've extended the covered period to 24 weeks, the question is, can we now use $46,000 and change? That would be 24 weeks of $100,000. We don't know the answer to that. I'd be shocked if they didn't allow $46,000 for individuals, employees that are non-owners. And I would venture to guess that they're also going to allow owners to take up to that 24 weeks worth of $100,000. This will, in essence, if you were a Schedule C with no employees, it should allow you to grab your whole loan and have the entire amount forgiven. So this is absolutely one of the top things that we're monitoring and hope to get in the next week.
Here's a question, I believe it's the EIDL. It said, did anyone receive $100,000 from the SBA? So we're aware of clients, the maximum on the EIDL loan was $150,000. That was on the new application. If you apply with the older application that had more details to it, you may have received more. But most applied with the newer, shorter application. Yeah, we are aware of companies that received the full $150,000. Another item to note as far as the EIDL goes, we've had clients now receive a message. If you did not receive the EIDL grant for whatever reason, that would have been automatically deposited into your bank account. The SBA is now sending messages letting those companies know that did not receive the grant that some of the information that they submitted may have been inaccurate or didn't match their tax filing. So they're matching up information, name, address, federal ID number, and bank information. So they're asking you to resend that information, and it looks like those grants will now hit for those of you that did not receive the EIDL grant. So that's good news.
All right, so we've got one here. Can we use 12 or 16 or 20 weeks versus 8 or 24? This also relates to the first question, actually, which is, can we spend the money over 10 weeks to use all the money? So I'm going to answer both of these at the same time. Right now, most businesses, if they had 24 weeks to spend it, would spend well above that. So you're going to spend all your money in 10 or 12 or 14 weeks. Because remember, you got funded at 2.5 times your monthly payroll, which is about 10 weeks. So if you had all your employees back within 10 weeks, you're going to spend it all on payroll. Excuse me. So yes, you should be able to use that period. However, we do feel that you're going to need to prove that you had employees during the 24 weeks. So what we're going to monitor in that new forgiveness application is, how are the FTE limits affected by the fact that you're now using more than 8 weeks?
All right, sounds like we need to get Dan a water over here. Shall we get this guy a water or something? Oh, there we go. You got his own water. All right, we got some questions here. Joan has a question on the EIDL. I thought that was just for agricultural. That is true. You can apply for a new EIDL loan now, unless you're in the agricultural business. So that is true. However, if you did apply and for whatever reason you didn't receive a response, it looks like they're getting back to people that maybe had some information that was inaccurate, and they're giving you another chance on that. Some of these other questions are about the $100,000 cap. Yeah, the cap is still $100,000 for owners, but now that the time period is longer, owners will be able to get paid more than the $15,384 because you're using up more weeks of the year of the $100,000.
All right, we got a question here. Is, if a business was not affected by the shutdown, can the business still apply for the PPP? The question is, or the answer to that, you have to make certain certifications on the application that current economic uncertainty is the reason for applying for this loan. As we covered in prior webinars, many of you, there's uncertainty around the economic environment right now. Unemployment claims are up and down. We don't know the long-term effect of this. Many people have been able to easily justify the economic uncertainty, but it's a certification you nonetheless have to make. The SBA has come out and said that they are automatically going to audit all loans over $2 million. They are then, any loan under $2 million, they've advised and said, hey, look, if you're under $2 million, you will have been judged to answer this question in good faith, as long as your loan was under $2 million. So I would consider that certification when applying for that loan, and make sure that you're comfortable with those certifications.
Here's a question. If a company uses over 100% of the PPP funds in a 24-week period and the FTEs are only at 90%, will the entire PPP be forgiven regardless of the FTEs? No, it would not. So remember, if you're using 24 weeks, you have until December 31st to meet your FTE requirement. If you're still only at 90% at December 31st, then only 90% of your dollars will be forgiven. So you got it, that December 31st day is important. If you're at 90%, you may want to consider getting to 100% so you get full forgiveness in that example.
All right, and our last question here is, if we have the PPP loan and then receive the grant from another source, can we use the same payroll on each if we go over the 8 weeks? The answer to that is no, you can't double dip. However, once you've spent all your money and taken PPP money to reimburse those expenses, any expenses that are not being reimbursed or forgiven by PPP funds would count for other credits and incentives. That includes the payroll tax credits John talked about earlier. That includes the EIDL. It includes all of those different things. So again, you can't double dip. However, once you've exhausted your PPP funds, then you can start looking at these other credits, which is why it's important to know about those things, which is why we cover them today. All right. So with that, again, we're going to keep it short this week because that's, nothing really new happened. So we just wanted to be here for you guys. We'll look at all those topics that you gave us for next webinars, upcoming webinars, if we don't get more PPP guidance, which I hope we will. So in the meantime, just want to remember everybody, stay strong, and I'll let John get the last word.
Yeah, stay strong and stay healthy, and we appreciate everyone that's been on. It's been great. It's been fun. Hopefully everyone's staying safe and healthy. And, there's a lot of bigger issues out there, obviously, in our world and our country right now than these economic things that we're talking about. So hopefully we can give you some relief on the economic side, and hope and pray that everyone's doing very well with all the other areas. So have a great day.